Thanks for joining me today on the Plan B CRNA podcast. I'm your host, Bobby Jones, and I often have people ask me about my own story, but I've never really had a fellow guest on the show who expressed an interest in interviewing me in return. That is, until now. That's right. In part 1 of 2 in our Flip the Script series, Mathew Newton, CRNA, steps in as our show host as I take the hot seat. Enjoy. Welcome to the Plan B CRNA podcast. I'm your host, Bobby Jones, and I'm so excited that you're here. The Plan B CRNA podcast is the only show made specifically for nurse anesthetists who are exploring options outside of their traditional career paths. This is the place to expand your mind and your goals as we uncover new ways to produce side income together. Join me for some honest, unscripted discussions with other CRNAs who are transforming their financial lives. This episode is brought to you by On-Call Capital. On-Call Capital is dedicated to educating CRNAs and other healthcare providers about investing outside of the traditional stock market. On-Call Capital also provides opportunities for you, yes, you, to create passive income and generational wealth while also lowering your taxable income through investments in the apartment and alternative investment spaces. If you haven't hit subscribe yet, make sure you do that right now so that you don't miss an episode. Thanks so much for joining me today. And now, on with the show.
Welcome to the Plan B podcast. I'm your guest host, Mathew Newton. This episode is brought to you by On-Call Capital. On-Call Capital is dedicated to educating healthcare professionals about investing outside of the traditional stock market. On-Call Capital also provides opportunities for you to generate passive income, create generational wealth, while also reducing your taxable income through investing in alternative investment spaces. Be sure to like and subscribe so you don't miss any of our valuable, potentially life-changing content. Thank you for joining me today, and now on with the show. So welcome to a provider spotlight episode of the Plan B podcast. I have a feeling everyone may recognize today's guest. We are fortunate he has taken time away from his busy schedule. Our guest was recently featured in the Real Estate Syndication podcast and Best Real Estate Investing Advice Ever podcast. I'm proud to say today we're turning the tables, and I'm going to interview the creator of the Plan B podcast and the wildly successful syndication group On-Call Capital, Bobby Jones.
Hey, Bobby, great to be here today, man. Thanks for having me.
It's good to have you here. I think with a lot of your listeners like myself, we hear you talk every week, and you interview all of these great guests about their niche, what they did, and all that. And I think honestly, everybody would love to hear a little bit about your story and what kind of got you here. Like it would be really beneficial to hear the successes, the failures, everything that you've done. So I guess my first question is everything I do always has a reason. There's a reason behind every investment move I make, every career choice I make. What is your driver? There's a lot to be said about believing in yourself and being brave enough to kind of take those first steps. I think everybody with a side hustle or a plan B is interested in quitting their day job. So, the question is how do you stop trading your time for money and being able to get to where you can trade knowledge and allow your investments to work for you, generate that passive income? I mean, because if you think about it, as a CRNA, you left a very well compensating career to essentially forge your own path. What you've done is impressive. So I guess what prompted you to take that leap?
Yeah, well, I mean, there were a lot of factors at play. At that time, basically, I got into healthcare because I wanted to help others. I think that's a large reason why most of us get into the healthcare field. Of course, I wanted to have a good, solid income and solid career and make a good living. But you don't get into healthcare if you don't want to help people. So that was really the basic, reason for getting into healthcare in the first place. But over time, being in healthcare, you can start to have the effects of burnout and all those kinds of things. And that started to happen with me a bit. And I happened to, be in this phase where I was doing 1099 work, but I was only working 3-4 days a month. And really at our rates of salary, you can still make a reasonable living doing that. But I had a lot of free time on my hands. And so I started wondering what other ways there were to make income that I I had time to do. I had time to pursue. So I started listening to podcasts and reading books and just trying to explore every avenue that I could, because I liked having my free time. Knowing myself, I knew that I didn't want to just trade one job for another because I enjoyed my time. So what could I do that either, didn't require a lot of work, or, I had capital to put into it, or I could automate in some way and make, kind of a system in place to take care of things and to produce that income. So, as you know, with all businesses, it takes some time to get those things off the ground. But listening to podcasts and things, I went through all kinds of topics, options trading and being a loan signing agent and a lot of these things that I've actually done rabbit hole episodes on. But what I ultimately settled on was real estate. And I started listening to Bigger Pockets episodes. Anybody who's listened to those knows that they are very encouraging, and basically they make you feel like you can conquer the world, and that was great. That's the content I was looking for, and so I started to go down the path of pursuing single family rentals, while also listening to continuing to listen, and then kind of segueing that into starting to listen to apartment syndication podcasts. So this evolution is happening with my mindset during the summer of 2019. Yeah, 2019. And basically, I had decided with my wife that we wanted to pursue real estate. We had some income or some capital sitting on the sidelines, and we wanted to deploy it to get a rental home. And that's what we embarked upon doing that summer. And so we had a turnkey agency that we trusted in. We believed that we were, going to be treated great and that things would work out perfectly, just the way they say it will on all these podcasts. And that was pretty much the farthest thing from what actually happened. We haven't gotten into the area where you asked me about mistakes, but I just am going to go ahead and dive into it here. If you're cool with that.
Go for it.
So I bought this turnkey property in a little suburb just outside of Birmingham, Alabama. Okay. And there are a lot of things about buying a turnkey property that require due diligence. First off, it's, the people that are rehabbing the property for you. You need to know the quality of work you're getting. You need to know the property management company. You need to know, who is setting this all up for you. And you need to already have a renter in place. If it's turnkey, you shouldn't have to worry about a renter. That should already be done for you. So I, for some reason, I just decided to look strictly at the numbers, and I chose a property that was essentially, it looked really, really good on paper, right? But it didn't have a renter, and I didn't really know the people who did the rehab job. The property manager sounded great, had a great relationship with them. Ultimately, that ended up going into turmoil. So we purchased this property, and it's not rented. They tell us that it's going to rent at $950 a month. And that's the goal, is $950 a month. Well, that didn't happen. We couldn't get anybody at that rate. And so we ended up having to drop the price by $100. That wasn't the worst of it, though. So that's fine. As long as it's cash flowing, I was fine with that. The problem is that it sat for a year vacant before we could actually figure out getting a tenant in place. And I had to switch property management companies. The new property managers came in. You've got to do this, this, and this with this property because it wasn't done well. So the rehab hadn't gone as well as I had thought because I didn't visit the property first. And so it was kind of a cluster. We had an AC unit that was stolen from it while it was vacant. So we had to replace the AC unit. They're poof, $5,000. So there were a lot of different issues along the way that I learned some valuable lessons about. And I viewed that as part of my education in real estate. Okay. So flashback to that summer when we're just buying that property. My youngest daughter, we end up needing to make a change to provide childcare for her. And I was the only option for that. I was only working a couple days a month. So we couldn't find a reliable childcare provider within, the 30 days that we had before school started and before everything kicked off. So I made the decision to liquidate some of my retirement funds to produce income so that I could stay home with my daughter. And at that point, we already had the one investment in the single family home. But that process was a pain in the rear end with getting through the banks and everything else. And finally, once we got through that, we're like, oh, whew, great. Now we got this property, and then it proceeded to not get rented for a year. So we decided at that point, well, let's try out apartment syndications. I had done all the research and had people that I trusted. We invested in our first apartment syndication, and it started paying us within 3 months. And it has paid consistently since that time. And so we decided to invest more and more in these apartment syndications to produce income. And that's what I have essentially used to produce income for us to live off of for the last 2.5 years.
That's excellent. That's excellent. It's interesting. You talked about, the trials that you kind of went through with your turnkey property. I'm a firm believer that I always say whether you think you can or you can't, you're probably right. And half of it's all mindset, and it's good that you said, you know what, hey, I made some mistakes, this happened, and I learned from it. The key word to me is lesson, because there really is no failure as long as you walk away with them. And it's like one of those, like I've had many failures in life, and it's funny because my wife and I have conversations about, I'm like, man, I could have done that better in business, or I could have done this better, and she'll say, do you learn anything? And I'll be like, yeah, and I'm still down on myself. And she'll go, then you succeeded. You did great. As long as you walked away with a lesson, I think that's always the most important thing. The other big thing is that it sounds silly, but you believe in yourself. To me, the mindset of walking in with positivity, surrounding yourself with positive people. It sounds like you and your wife work as a really good team. You kind of have your goals and you're shooting for them. I think all these things are really, really positive influences. So as far as having these companies, so if you think about it, you have Plan B podcast, you have On Call Capital. These are two things that are growing, exponentially, month by month for you, and it's very impressive. Now, I always say heavy lies the crown. So do you shoulder all this yourself? Is there anyone, I guess, behind the scenes that helps you support? Do you have a staff that works with you, or do you just do everything yourself right now?
So at this time, I have a podcast editor who goes through and, edits these shows. I tried to do that. I tried to learn how to do that. And what I figured out was that my time was just better spent doing other things. So I go out and I get my own guests for the show, and, I produce the content and I do everything else for the show. But I do have a podcast editor who handles that. Otherwise, when it comes to On Call Capital, it's really about relationships. I don't have anybody that I'm, that is under the On Call Capital umbrella, other than myself. But I could not have any offerings if I did not have partnerships with operators who are successful in their field. So, we've raised money for 2 different offerings in the last 6 months. And those have been great because they're with partners that I trust. Both of those properties are multifamily in Texas, in a couple of different Texas markets. I've got one that's, hopefully upcoming, that's in self-storage down in Florida. That's something where, again, I've got some partners that I trust that we've been through a couple of fires already, and I trust them to treat me and my investors well. So that's what a lot of this comes down to, is the partnerships and the networking. So I can say that I'm doing it alone in air quotes, but none of this business is just on. I mean, it's just not all me. I could not have a successful business without partnering with successful operators.
I love to hear that. I'm a huge proponent of having good people you work with, having people you trust. Like even with my real estate ventures, if I didn't have my property manager and my real estate agent, I'd be lost.
Yeah.
And I was fortunate enough to be a social butterfly. So I talked to everybody about who do you know, what do you do, what's your experience in these things. And I feel like it's made me a stronger investor. Even just talking to you, I mean, like me and you have these good conversations about investing. We share each other's knowledge, and I feel like it makes a synergistic effect, and I think it just makes everybody better. So, like, so right now, if you were to turn on the TV to any Fox or CNN, you'd see kind of doom and gloom about potential real estate crashes, stock market volatility. Who knows where cryptocurrency is going? We have record inflation. We have all these naysayers saying nay. What are your thoughts on investing right now with, I guess, the turmoil in the world? Do you just leave your cash in the bank and just cross your fingers that inflation isn't going to eat it up? What's your crystal ball, I guess, kind of telling you right now? What do you do with your money?
Well, okay, so right now it certainly would be helpful to have some cash on the sidelines. If you foresaw this happening and you had cash right now, I mean, hey, why wouldn't you put some in the stock market or in crypto when it's down as far as it is? But
Coupon.
exactly, I mean, you basically have a 30% off coupon here, so you're buying at a discount. And but I will say this, when it comes to inflation and things like that, I mean, inflation is one of the big topics right now. And, I mean, inflation's higher than it's been in 40 years. I've never experienced this level of inflation in my life. I'm 41 years old. I don't know what it's like to live in a high inflation environment, and neither do a lot of people that are investing today. So this is new territory for many people. But there's the adage that don't wait to buy real estate and wait. So going back to my first my big mistake with real estate, buying that turnkey property, here 2.5 years later, it's appreciated by $20,000 at least, if not a little bit more, if not closer to 30. So yeah, it was a mistake that cost me some cash flow in the beginning, but I have renters. It's cash flow positive now, and the property itself is appreciating. So it's doing what it's designed to do over the long term. And that's the general idea with real estate, is that, you don't buy real estate for today. You buy it for 5, 10, 15, 20 years down the road, when you're either paid off or it's appreciated so much that you can take some of that capital out of it and redeploy it somewhere else. So it takes a mindset shift, to an intermediate term level, at least, if not a long-term level in view. With the stock market, obviously there's a ton of fluctuations, from year to year, from month to month, day to day. And crypto is even more volatile. Those are long-term investments, and those are things that you put in your portfolio for the long haul. But when it comes to real estate, you can use it as more of an intermediate term thing. And, that's essentially what I've done with it. I produce income with it, but I also had two, the first two multifamily offerings that we bought, they were supposed to be 5-year holds. Well, those properties sold within 2 years of each other, of first buying them. And I nearly doubled my money on both of those investments within 2 years.
That's fantastic.
And so I used a 1031 exchange to roll those into the next investment. And that produces even more cash flow for me and defers taxes. And it's, my nest egg continues to grow and appreciate. So that is some of the power of investing in real estate that a lot of people don't talk about. And, that's something, I mean, I'm combating inflation right now. If you look at inflation, it's at 7% or higher right now. Well, that's going to eat away. Your money's going to be worth half as much in, just a few years at that rate. And we don't have any reason to believe that inflation's not going to continue, at least for, the foreseeable future. It's not like there are a ton of plans in place right now to try and combat it that are really effective. So, and we've got the, crisis going on in Ukraine, and there's all these global issues going on. So the thought that this could continue for a couple of years, I think, is a reasonable thing. The interest rates for real estate are going up. Well, we've been pretty lucky so far. I mean, when people bought properties back in the 70s, hard money loans, it wasn't uncommon to see a 12% hard money loan. That got down as low as about 5%. Here during these low inflation times and low interest rate times. Some of that's just kicking back up right now. That doesn't mean, if you can get a loan and it's still at 7%, but you're going to earn 15% on that investment, it still makes a heck of a lot of sense to move forward with that investment.
It's funny you talk about the differences in the loans. I actually was talking to a family member a while back, and they were like, I'm going to go and pay my student loans off immediately as opposed to invest. And I said, well, what's your student loan rate? And it was incredibly low, 2 to 3%. And I'm like, you can do that. It's not a terrible idea. I was like, but if you could take that, that $30,000 and put it into maybe a real estate venture or something like that and generate 10, 15%, where's your money best being served? I'm like, neither is a wrong option. I'm like, but you might want to look at the latter as opposed to paying off the low interest, because the low interest loan is essentially free money right now.
Yeah.
And that's, that has its merits. One of the other things that I'm hearing you talk about, sounds like with our market volatility and kind of everything going on, having a diversity of investments that aren't completely interconnected works really well. If one area gets hit, like the stock market, then your real estate can recover. If your real estate gets hit, maybe your syndications do well. So I think having a good diverse portfolio, not all your eggs in one basket, is also a strong idea. One of the other things when I talk to people, and I wanted to kind of get your impression on this, is they think that if you want to do a syndication, if you want to get in real estate, if you want to do anything, you have to be rich. You have to come to the table with $100,000, $200,000. Now, I know for me, I typically, when I buy real estate, I put about 20% down on it. And that's just my personal preference. That's my spreadsheet on my computer, how my ROI looks. And I always look for the best ROI. But I know there's other loans out there and options to where you could put 3.5% down. You can do these things. So when it comes to doing what we do you have to be rich and jump in with a giant nest egg, or can you start small and let it snowball? What are your thoughts?
So you certainly don't have to be rich, but you probably need capital of some type. There is the thought that you can go in and use other people's money, and there are plenty of people who are successful with that. They find a good deal that use other people's money to take down the deal and just pay off that loan. And that's the nature of hard money loans, but I find that it's pretty reasonable to come to the table with some form of capital. Now, when it comes to, these apartment syndications or, buying self-storage units or whatever the case may be, you can get in for as little as $25,000. And there are two different types of syndications out there. There's a 506B and a 506C. 506C are for accredited investors, and those are investors who either make $200,000 a year or $300,000 jointly with their spouse, or they have $1 million in net worth. So those are the deals that, those are only available to investors who do have that kind of net worth or liquidity with their income. However, I was not an accredited investor when I first got started. My first, 4 deals were purchased. I got into them as what's called a sophisticated investor. So that is an investor who doesn't meet those income standards, doesn't meet that net worth standard, but has done enough research and has enough of a knowledge base to be able to know the risks about what they're getting into. And of course, that's a very subjective kind of thing, but I had done the research. I knew what I was getting into. I knew what I was investing in. And so with a 506B, sophisticated investors can invest in those kinds of deals, up to 35 in an individual deal. So like I said, my first 4 deals that I got into, those were all 506Bs. I was not yet an accredited investor. I am now, because I invested in real estate and it grew my net worth to such a point that, I have a lot more net worth than I did when I got started. So you can use it before you get to those high wealth areas to grow your wealth. And that's something that I try to preach, is that no, you don't need a ton of money. I mean, this podcast is pretty much geared towards some of those higher earning professionals in healthcare, and most of the people out there, they kind of cringe when they think about, I got to put $50,000 into a deal that you're going to hold on to for 5 years. Oh my gosh, that's so long, and I'm not going to have access to it, and I can't do anything with it. And it's like, well, yeah, but what do you do with the money that you dump into your 401k and you just stick in the stock market? Like, you invest thousands and thousands of dollars every year. $50,000 might be what you put into your stock market account, and there's a lot more volatility and there's a lot more risk associated with the stock market than there is with real estate.
Especially right now.
Yeah, especially right now. And we're seeing that play out. During the pandemic, my real estate investments never stopped paying. My apartment syndications paid the entire time because the risk level is low, because the appreciation of real estate didn't slow down during the pandemic. Because we have a housing crisis. We don't have enough housing for all the people that need it. Those supply and demand drivers are going to continue into the future. So we're going to continue to see appreciation of real estate over the next several years. I don't foresee that changing because the numbers don't bear it out. It doesn't make any sense for it to change. Unless there's just all of a sudden thousands upon thousands of homes just start appearing everywhere across our country, which doesn't seem likely to me, especially with the supply chain issues that we've got going on right now.
I could not agree more. So,
thanks for listening to this special Flip the Script episode. If you enjoyed what you heard, make sure you give us a 5-star rating and let me know what you think with a review. If you're interested in connecting with me to learn more about passive income opportunities, you can find me on Facebook, LinkedIn, or Instagram, or just visit my website at www.oncallinvestments.com. I hope you'll join us next week for part 2 of our discussion. Until then, be safe and take care of each other out there. Thank you so much for joining me for another episode of the Plan B CRNA podcast. If you haven't already subscribed and reviewed the show, I'd be honored if you took the extra time. It really helps to expand our reach and get the word out about the show. If you're a CRNA who is interested in sharing your story on our podcast, I'd love to have you. Please email me at bobby@oncallinvestments.com for more information. This episode was brought to you by On-Call Capital. They are dedicated to helping providers like you develop passive income and generational wealth through investments in the apartment and alternative investment spaces. Feel free to check out their website at www.oncallinvestments.com and subscribe to their free educational email series. You can find On-Call Capital on Facebook, Instagram, and Twitter. You can also check out our YouTube page, where you'll find all of the show episodes along with other educational videos. Thanks for listening, and we'll see you on the next episode.